Hello, Business 600A students. This is Professor Hassey, week number 7, introduction video for our accounting finance course as we head into the week 7 for our class on July 19th, Monday evening. This is an introduction video for our class where we'll be reviewing our project paper discussion and talking about that project paper, which is due August 1st. We'll be reviewing the midterm examination. The grades have been posted. We'll be talking about chapter 14 and looking at problem 14.1a as an example of chapter 14, managerial accounting, understanding what costs are. Chapter 18 will be next up with our cost volume profit analysis of break-even and contribution margins, which are very important to the study of business. And we'll be looking at in-class or review problem 18.2a to review this type of material. Then I'll be giving you an assignment to do for the next week, which will be some problems from chapters 14 and 18, and those problems will be posted tomorrow prior to class. Let's take a look at an introduction video to our topic this week.
In this chapter, you'll learn how costs and consequently profitability is affected by changes in volume. You might think that it is obvious that costs always increase as volume increases. However, the increase is not always proportional. Variable costs are costs that increase proportionally to volume changes. For example, if you make twice as many cupcakes, you will use twice as much flour and sugar. Fixed costs are costs that a company incurs no matter what volume they produce. The cost of depreciation on baking equipment is fixed. You will incur the same total depreciation cost whether you make 100 cupcakes or 1,000. Why does this matter? First, the difference between fixed and variable costs affects your break-even point, the point when your costs exactly equal your revenues. Entrepreneurs will tell you that their initial goal is to achieve break-even as quickly as possible so that they quit losing money. The higher your fixed costs, the more units you will need to sell in order to break even. I encourage you to read this chapter carefully. The concepts you learn in this chapter are critical to your understanding of topics in later chapters, including operating leverage, incremental analysis, and product pricing.
Some important points there in that very brief introduction to the chapter on cost volume, chapter 18. Break-even point, contribution margin, fixed cost, variable cost, all very important, and we'll be using these also in our finance discussions of capital budgeting in a couple of weeks. So in chapter 14 and 18, we're learning about the definition of expenses, period costs, product costs, material costs, labor costs, variable costs, fixed costs, break-even point, all very important terms to the study of accounting and finance. And we'll look at some review problems and do some assignment problems for grades in the coming week. We'll see you all Monday evening, July 19th at 6 o'clock. Thanks, everybody, and we'll see you then. Bye-bye.